It's 8 p.m. and it's time for your daily market dose, Corporate Central, where we get you the everyday pulse of the corporate world and also the highlights of the market fluctuations taking place for you. But first, let's find out what took place in the corporate world today. In one of the biggest single orders, Indigo is close to ordering 500 narrow-bodied A320 jets from Airbus. This comes just a few months after Air India ordered 470 aircraft from Airbus and Boeing. It is estimated that such a deal would be worth around $50 billion at Airbus's most recent list prices, but would probably be worth less than half that after widespread airline industry discounts for bulk orders. As per reports, Airbus and Boeing are also still in separate talks about selling 25 A330 Neo or 787 wide-body jets to Indigo. According to Reuters, Peter Elbers, Indigo's chief executive officer, declined to comment on commercial matters while attending the annual meeting of the International Air Transport Association in Istanbul. Up next, Reliance Retail and 6 others have submitted expressions of interest for Future Supply Chain Solutions, a future group firm that is under insolvency proceedings. One City Infrastructure, Globe Ecologistics, Shanti GD Ispat and Power, Camions Logistics Solutions, Tatkal Loan India and Sugna Metals are the other firms in the fray. The resolution professional is verifying the EOIs, FSCS said in a stock exchange update. The resolution professional will submit the final list of the prospective resolution applicants on June 14, it added. The company was admitted to bankruptcy on a petition filed by DHL E-Commerce India alleging default in payments. 2 other operational creditors, Best Roadways and Leap India, had also moved the national company law tribunal. Well, moving on, IT major Wipro Limited has set June 16, 2023 as the record date for the whopping 12,000 crore rupee buyback plan. The IT major had announced 12,000 crore rupee buyback plan and had fixed a floor price of 445 rupees per equity share. Wipro will buy back up to 26.96 crore shares of face value 2 rupees each from the shareholders and account for 4.91% of all equity shares. This would be Wipro's first buyback in over 2 years. Last buyback of Wipro was of 9,500 crore rupees carried between December 29, 2020 to January 11, 2021. During this buyback, Wipro tendered 22 million equity shares, accounting for 96.38% of the total buyback size, aggregating to 9,156 crore rupees. Prior to this, Wipro had launched a buyback program of 10,500 crore rupees between August 14 to August 28, 2019. Well, a lot can happen over a cup of coffee. That was a tagline for Cafe Coffee Day. But since its founder VG Siddhartha passed away on July 29, 2019, the company has slashed its store count to 469 from 1,752. Revenue from CDEL's coffee retail business, which includes the CCD chain, was 1,653 crore rupees in FY19, which was down to 869 crore rupees in FY23. CDEL has over the last few years cut debt by selling assets, experts tracking the market has said. Asset sales have included offloading a tech park in Bengaluru to private equity firm Blackstone for 2,700 crore rupees, as well as selling off CDEL stake in tech firm Mindtree, which is now merged with L&T Infotech for 1,800 crore rupees. Moving on, Centre's offer for sale of shares in Coal India received a robust response from non-retail or institutional investors as well as the retail investors on Friday. In the 2-day offer for sale, the government sold its 18.48 crore shares or 3% in Coal India. The floor price for OFS would be 225 rupees per share. At the floor price, the overall offer size adds up to over 4,100 crore rupees. Retail investors on Friday bid for over 2.58 crore shares. Institutional bidders on Friday put in bids for 5.12 crore shares. Coal India OFS is the maiden government stake sale of a public sector undertaking in the current fiscal. The government currently holds 66.13% in CIL. The stake sale in Coal India will help the government inch towards the 51,000 crore rupee disinvestment target set for the current fiscal. Up next, dealers and major distributors of Hindustan Unilever have started destocking high-cost inventory as the FMCG major has commenced price cuts in certain categories with more reductions in the offing. An HUL spokesperson confirmed the price cuts, with commodity prices such as that of palm oil, tea and crude oil having come off their highs. Trade experts say price reductions have been taken in categories such as laundry products, skin cleansers, soaps and in tea. In anticipation, stockists are clearing their high-cost inventory and waiting for fresh stocks to arrive. In such a scenario, it is usual to see a surge in secondary sales from wholesalers to retailers compared to primary sales, that is from the company to wholesalers. Well, that was all on corporates. Now let's take a look at those stocks that were buzzing today in the market and also analyze the reason behind it. First up, to curb volatility in small cap counters, leading stock exchanges BSE and NSE have put in place an enhanced surveillance mechanism for companies that have a market cap of less than 500 crore rupees. The enhanced surveillance measure, better called as ESM, will be effective from June 5. SEBI and exchanges in a joint meeting have decided to introduce ESM framework for micro-small companies with market cap less than 500 crore rupees. The NSE and BSE said in two separate circulars. Under the framework, the exchanges said, and I quote, "The trading for these securities will be settled through a trade-for-trade mechanism with a price band of 5% or 2% if the stock is already in the 2% band." It added that the security shall be part of the framework for a minimum period of 3 months. However, in case the security is under stage 2 of the framework, it shall be retained under stage 2 for a minimum period of 1 month. And automobile stocks are on the rise after auto sales posted robust numbers. Due to that, auto companies are on the roll. Recovery was witnessed across the segments with rural demand showing green shoots. It was reported that motorcycle sales grew quicker than scooter sales on a monthly basis. ICICI Direct stated that two-wheeler segment growth was led by Hero MotoCorp. In passenger vehicles, it was Maruti, while Tata Motors led the commercial vehicle segment. Brokers are bullish on Tata Motors and Ashok Leyland. Nomura is positive on Bajaj Auto, Tata Motors, Ashok Leyland and Mahindra. For Anand Rathi, it is Eicher Motors, Hero MotoCorp and Tata Motors. Well, that's it for today here on Corporate Central. Download the Money9 app and stay tuned to Money9 English's YouTube channel. Also check out money9.com for all the latest updates on personal finance. See you again tomorrow at the same time. Until then, take care. Bye-bye.